Good evening, ladies and gentlemen. Welcome to our post-results teleconference for the quarter ended December 31st, 2020. I do wish that you and your family continue to remain safe and healthy during these times. For today's call, we have with us Dr. Sharvil Patel, Managing Director, Mr. Nitin Parekh, Chief Financial Officer, Mr. Harish Sadana, Chief Strategy Officer, and Mr. Vishal Gaur, Senior Vice President, Corporate Finance. While 2020 turned out to be one of the most challenging years for people across the globe on account of the unabated spread of COVID-19, 2021 offers new hope to humanity as various countries have now seen success in the development of vaccines to combat the pandemic. With that, let me take you through the highlights of the quarter gone by. During the third quarter of FY21, we posted consolidated revenues of 38 billion rupees, up 4% year-on-year. Consolidated EBITDA grew to 8.07 billion rupees, up 16% year-on-year basis. Our EBITDA margin improved during the quarter as it went up by 210 basis points to 21.3% from the 19.2% registered during Qtr3 FY20. Adjusted for loss of export incentive revenues, our EBITDA margins would have been in line with that of the preceding quarter. Consolidated PAT for the quarter was 5.27 billion rupees, up 41% on a year-on-year basis and up 11% on a sequential basis. The quarter gone by turned out to be an encouraging one for our India business, which comprises human health, consumer wellness, and our animal health business, as the business grew by 20% on a year-on-year basis, registering revenues of 16.43 billion rupees and drove the overall performance for the quarter. The US geography, comprising of generics and the specialty portfolio, registered revenues of 16.03 billion rupees during the quarter. Our emerging markets business grew by 11% on a year-on-year basis and posted sales of 2.93 billion rupees. On a sequential basis, the business grew by 24% during the quarter. Now let me take you through the operating highlights for the third quarter of FY21 for each of our business lines. Starting with our human health business in the Indian geography, the pharmaceutical market in India showed further signs of improvement as it grew by 6.4% during the October to December 2020 quarter after registering a flattish performance during the July-September 2020 quarter. Performance of our business also improved during the quarter on the back of steady improvement in demand amidst various unlocking measures being undertaken by the government. In fact, we were the second fastest growing company among the top 10 Indian pharma companies during the quarter gone by. Our specialty cluster grew faster vis-a-vis the mass cluster and in turn led to a better performance vis-a-vis the market. Overall, our human health formulations business posted sales of 11.04 billion rupees, up 21% on a year-on-year basis. Branded generic business grew by 24% on a year-on-year basis. On the therapy fronts, we gained market share in pain management, anti-infectives, and the anti-diabetic portfolio during Q3 FY21 vis-a-vis the corresponding quarter of the previous financial year. We have maintained our ranking in the key therapies of gynecology, respiratory, and pain management during the quarter. On the back of continued revival in the economy and with the festive season kicking in during the quarter, our consumer wellness business witnessed a strong surge in the revenues, with the majority of the brands growing in double digits. Overall, the business grew by 16% on a year-on-year basis, driven by healthy double-digit volume growth. Our animal health business in India saw another quarter of robust performance as the business posted sales of 1.63 billion rupees with a growth of 17% on a year-on-year basis. Implementation of digital initiatives along with focused efforts to enhance customer connect led to the improvement in the growth of the business. Our US formulations business posted sales of 16.03 billion rupees, down 4% on a year-on-year basis. We launched 7 new products during the quarter. These include the launch of doxorubicin liposomal injection, which is the first complex injectable developed in-house. We received approvals for 9 products, including 4 tentative approvals, and filed 10 additional ANDAs with the US FDA during this quarter. New product approvals for the quarter include 3 first cycle approvals. Cumulative first cycle approvals for the year 2020 now stand at 7. During the calendar year 2020, we received approvals for 38 new products, which is the second highest number of ANDA approvals received by any generic company across the world. Our cumulative filings include 71 filings for injectable products, and our cumulative approvals include approvals for 56 injectable products. This concludes the business review. I would now request Dr. Sharvil Patel to take you through the progress and initiatives in our innovation program. Thank you.
Thank you, Dr. Nayak, and good evening, ladies and gentlemen. As you know, that our continuous efforts to combat the COVID-19 pandemic, we completed phase 2 clinical trials of our first-in-class plasmid DNA ZyCoV-D during the quarter gone by. The trials were conducted in over 1,000 healthy volunteers as part of the adaptive phase 1, phase 2 study. The vaccine was found to be safe and elicited strong immune response. We also initiated a phase 3 trial for the ZyCoV-D vaccine now. The trial is progressing very well, and we will be conducting it in around 30,000 volunteers across 60 sites in the country. We are expecting to complete the recruitment of 30,000 volunteers by end of February. As you are aware, we are putting up a plant for the production of ZyCoV-D vaccine. The plant is expected to be ready for commercial production by the first quarter of FY22. The designated capacity of the plant is equivalent to 120 million doses. During the quarter, we also submitted an application to the RCGM to carry out the preclinical and safety toxicity studies of our recombinant measles vector vaccine, which is the ZyCoV-MV vaccine, which is a second vaccine candidate for the COVID-19. On the NCE research front, during the quarter, we successfully completed phase 2B trials for desidustat for the treatment of hypoxia in hospitalized patients in Mexico. Coming to biologics, we have initiated phase 3 clinical trial in India for our pegylated interferon alpha 2B in 250 patients. So far, we have recruited 115 patients, and the trial is moving along smoothly. We submitted an IND application to the US FDA for our pegylated interferon alpha 2B for the treatment of COVID-19 patients. We are also developing a cocktail of monoclonal antibodies targeted towards the spike protein of the SARS-CoV-2 that causes the COVID-19. Regulatory permissions to start the toxicity studies were obtained, and the toxicities have been initiated. The studies will be completed by March 2021, and the clinical trials will thereafter be initiated. With this, let me give you an account of the progress made so far on the different R&D projects other than those targeted towards the COVID-19. I'm very happy to say that the saroglitazar magnesium has been granted orphan drug designation by the US FDA for the treatment of patients with primary biliary cholangitis. This follows the granting of the fast track designation by US FDA to the molecule for PBC in December 2020. During the quarter, we also received approval from DCGI for saroglitazar magnesium for the treatment of non-alcoholic fatty liver disease, NAFLD, in India. The molecule becomes the first medicine for the treatment of NAFLD. On the desidustat, which is a second NCE molecule, we have completed large-scale recruitment of patients in the phase 3 clinical trial in India for the treatment for anemia in dialysis and non-dialysis dependent CKD patients. In fact, we recruited a large number of patients despite the challenges posed during the COVID-19 pandemic. 392 patients were recruited who were suffering from anemia and were on dialysis for the phase 3 trial, also known as the DREAM-D trials, and 588 patients were recruited who were suffering from anemia and who are not on dialysis for the phase 3 trial, also known as the DREAM-ND trial. We have received regulatory approvals in India also to initiate phase 1 clinical trial for a new chemical entity ZYIL1, a novel oral small molecule candidate targeted at selectively suppressing inflammation caused by NLRP3 inflammasomes. In order to provide a remedy for malaria, we have been developing a molecule which is fast-acting and effective against both Plasmodium falciparum and P. vivax strains of malaria parasite. Phase 1 study in healthy volunteers has demonstrated long half-lives and potential for a single dose to cure malaria. We now plan to pursue the development of this molecule in close consultation with the global regulatory agencies. On the biologics front, we received marketing authorization for one biosimilar in India and completed preclinical toxicity study for another biosimilar during the quarter. Talking about our vaccines portfolio, we successfully completed our phase 2-3 trial for tetanus diphtheria, the TD vaccine in India during the quarter. On our 505(b)(2) initiatives, during the quarter, we submitted an NDA for one product from our specialty portfolio. We continue to explore potential collaborations and licensing opportunities to grow our specialty as well as complex generics business. Till date, we have successfully in-licensed 16 products to build the product of complex generics. This includes 2 products where we are likely to hold an exclusivity, first to file status, and are likely to have an 180-day exclusivity upon launch. Thank you, and now we will start with the Q&A session. Over to the coordinator for the Q&A.
Thank you very much. Ladies and gentlemen, we will now begin the question and answer session. To ask a question, participants are requested to click on the link for instructions to dial into the audio call and enter *1 to join the queue. Participants are requested to limit their question to 2 per participant. If time permits, you may join the question queue for any follow-ups. The first question is from the line of Saion Mukherjee from Nomura. Please go ahead.
Thank you, sir. So just wanted to understand the India growth. If you make adjustment for remdesivir and other COVID-related drugs, what is the underlying growth? And also related to that, given the fall in COVID cases, is there any stock return that we may have to book in the next quarter? Just wanted your views on that.
So with regards to your second question, we don't expect any stock returns for our remdesivir. Obviously, the cases have come down, and that accordingly the volumes have come down. We still have a healthy volume mix for export, so we still continue to see good traction on remdesivir. In India, as I said, certain therapies have done very well, and so the specialty play, especially the diabetes franchise, has done very well and overall internally grown at good market shares. And so has our respiratory portfolio, which has improved significantly. However, it doesn't reflect right now in the IMS or AVAX right now. So the specialty portfolio is doing well, and the pain, we have gained good share in the pain management area, so that's boding well for us. And a lot of new introductions, both in the diabetic franchise and in the respiratory franchises, are doing well.
So, sir, would you say it's been adjusted for COVID-related drugs, because that seems to be quite lumpy? So it would be single digit, mid single digit, some kind of indication if you can provide, sir.
So see, we don't give a breakup like that, but I can at least tell you that for the quarter gone by, and if you look at the top Indian companies, and if you look at the external factor, we were the second fastest growing company.
Okay.
And that doesn't cover largely the COVID portfolio because it's obviously hospital driven.
Okay. So just a couple of more on this saroglitazar for fatty liver. What's the kind of potential you see, how large it can be for this particular indication or in India?
So there are two you're talking for India or global market?
So this you got an approval from DCGI, right, for India market?
Yeah. So India, it's a very large opportunity today. The prevalence of NAFLD and NASH is very high, and obviously there is not enough diagnosis and treatment available. So we have recruited a lot of patients when we got approval for TG and treatment for triglycerides over high triglycerides. But now with this indication, we will see a longish therapy in terms of usage. And we are expecting, our vision and our plan is that this will become the largest selling molecule in Zydus in the next 3 to 5 years.
In 3 to 5 years in India, okay. And sir, just one last question, if I can just ask on the US progress for, you got the orphan drug designation. So what's the timeline? What's your plan? Are you looking for a partner? If you can share something on the timelines and what we should be watching out for this particular molecule for US.
On US front, we have two indications, PBC and NASH. On PBC, we believe that we can complete everything and enter the market in somewhere in 2023. And by NASH, we hope to enter by 2025. There have been recent updates by the FDA which may help us push this timeline better for NASH earlier. So we are very excited about the recent developments with the US FDA. Both the FDA has blessed our work in terms of our protocol. So we are starting our trials very soon. On PBC, it's a very interesting area. Again, no approved drugs. And because of the need of the treatment, we got orphan drug as well as priority fast track designation. So I think we are very excited about it. We feel we can commercialize this ourselves. It doesn't require a large footprint. We are working towards that capability. At the same time, we will continue to also look at options of finding suitable partners if we feel that they can, if that option works out better for us. But currently, we are committed to launching these molecules ourselves. And we can see the opportunity size by 2026 for PBC itself is $10 billion in terms of market size. So it offers a very large opportunity for us. And if we are able to get a decent market share being among the first wave of launches, it would bode well for the molecule. And when we get through with the NASH study, then it opens up even a 2 to 3 times larger market size for it, which will also require a larger reach. And so we are working separately on that as well.
And sir, how much investment would be required for the remaining development studies before you file the NDA?
So still we have still a runway of 3 to 4 years to do the investment, and we are planning the whole clinical work has been planned by our internal teams. So it is very well managed, and we will manage it in the assumptions that we have made in terms of 8 to 9% of our overall spend on R&D.
Okay. Thank you, sir. Enjoy back to you.
Thank you. The next question is from the line of Kunal from MK Global. Please go ahead.
Thank you for taking my question. So first question is on the vaccine. So for the phase 3 trial, our readout is it based on the number of events, or we have a fixed readout on particular day after the second shot or the third shot?
So currently it is based on the number of events, 158.
158. Okay. So now that we are seeing the cases in India is reducing, so does that mean that it might take longer than what we initially expected readout by like March end? So because cases are reducing, so it might take more longer time to reach that event number, right? Or you are still switching to the March end readout?
No, March end we won't have the readout. March end, Feb end we hope to complete first dosing. We are a 3-dose vaccine. We expect a readout in the first quarter of the next financial year, not in March.
Okay, first quarter of next financial year. And how much would have been invested on this vaccine in terms of R&D and CapEx?
So all of the investment so far we have done is through obviously internal plans. So it's sizable. I think in the end we will end up investing anywhere between 150 to 250 crores. overall for capital investment, R&D, and other things.
Okay. And then this plant can be used for any other vaccine, right?
No. Over a period of time, it can be used for other platforms, but currently it is planned for COVID only.
Okay. And second question, basically is, if we are to target some of the emerging markets for the vaccine, what will it require, and have you started any work on that? Like, will it require bridging studies or maybe full-fledged studies, or and have you started these processes?
So it's an important question. We strongly have always believed that this platform offers the most safe and efficacious way of handling such a large pandemic. And we are very happy to see the strong response we are getting from different countries. So a lot of the countries are ready to accept phase 2 data and get approval. So we have almost all countries accepting a phase 2 trial data for market authorizations. Some will do local studies if necessary. Today, in terms of our opportunity size, we have orders far more than what we can make in terms of what we have committed to. So we have to now work on prioritization of supply and prioritization of manufacturing, because we have more orders than what we can make.
Okay. Thank you for the follow-up.
Thank you. The next question is from the line of Prakash Agarwal from Axis Capital. Please go ahead.
Yeah, hi. Thanks for the opportunity. Good evening. So first question on the US, I missed your opening comments. There's a Q&Q decline, and you also mentioned on the pipeline you have 16 complex generics. So what explains the decline given that you had Doxil launch and so if you could help us understand that, and some commentary in terms of complex generics, and when would this be monetized?
So the decline for the quarter is on account of two things. One is obviously we didn't have a flu season as it was predicted also. Also, there was some inventory correction that happened on few products as the year ends in the US for the buyers. So obviously some orders were, I would say, delayed from that point of view. We don't have any change in market share, so we continue to hold on to strong market shares. On our main compound, Lialda, we maintain still strong market shares of about 55%, and it's stabilized. What we did not see is one-time opportunities on this molecule and some because of the year end. So that we hope will start coming in from the next quarter. In terms of future outlook, we believe that quarter 4 will be trending towards similarly anywhere between $215 to $220 million. And with the ramp up happening in quarter 1 of the next financial year, we see a significant uptick in our value from a quarter-on-quarter point of view. And that is because of impact of new launches that are happening now and in February onwards.
Okay, but you mentioned Q&Q because of flu season. I think Q2 wouldn't have any flu season this thing. I was understanding why the sales declined Q&Q.
No, Q-on-Q there is no flu season. I'm just saying I'm comparing it versus last year.
Mm-hmm.
Q&Q
decline is largely due to inventory correction?
Inventory correction and not enough one-time buys.
Okay, got it. Okay, perfect. And second, sir, on the cost side, if you look at it, clearly you're doing R&D initiatives, R&D cost has gone up. But if we do the math, X R&D, your cost is substantially, controlled. So how do we see this going forward, especially going into fiscal 22 and Q4, given, the marketing, all the companies are talking about that, marketing promotions are coming back to normalcy. How should we see that in Q4 and 22?
So there are two different markets, right? For, I think, US business, there was no curtailment of cost or anything. I mean, the business continued without any hiccups. In fact, we improved our supply chains and everything. When it comes to India business, our one large part of the business, which is at consumer health, obviously went through a good amount of marketing investment. So it's come back to its normalcy in the last quarter. So it's already achieved that. When it comes to our India formulations business, we are at 70-80% of or 80-85% of what we used to spend. So we are back to normal in terms of what we used to spend. And I'm very happy to see that there was a good growth all around the business, whether it was animal business or consumer health or wellness and India formulation. So going forward, we think our costs have normalized. Our next year growth on cost will be obviously a little higher than this year, but it will be overall we would see good margin improvement on some of our businesses on India front.
But there will be growth on the cost side, right? I mean, currently you are around 19% of sales. There would be a 50 to 100 basis point increase or no?
Nitin bhai or Vishal, you want to take that question?
So yeah, there would be some increase in the expenses, but we don't foresee that the expenses would still be in the pre-COVID levels, because whatever initiatives we had taken while we were in the lockdown, we hope to continue them and build on them further. So we don't foresee the expenses to be coming back to the pre-COVID levels.
Okay, perfect. Thanks. I'll join that.
Thank you. The next question is from the line of Anubhav Agarwal from Credit Suisse. Please go ahead.
Yeah. Good evening, sir. Just one clarity on the phase 3 trial that you talked about. So what percentage of the volunteers you have already recruited out of 30,000, let's say like 50-60% or 70% already done? And how many of them have already started giving the first shot?
So I think our view is in the next 10 days, we would have had about 15,000 plus people who would have finished first dose. And end of the month, we are confident that we can complete most of the recruitment for first dose.
The first dose would have been given to all this 30,000 by end of February. That's
yeah.
Yeah.
Okay. Yeah.
And one question was on the tax side. Nitin bhai, on the budget proposal, goodwill amortization was excluded. And we see in Cadila Healthcare, we almost have a 460 crore amortization of goodwill each year. So would there be impact on Cadila's overall taxation because of this?
No, till financial year 24-25, we don't envisage any additional tax outgo because of proposed change in goodwill depreciation.
Not even the cash tax rate?
No, because we have unabsorbed depreciation, if we talk of Zydus Wellness specifically, and we have MAT credit, and also we have ATI benefit in Sikkim for both Zydus Wellness as well as Zydus Healthcare.
So Anubhav, you specifically asked about Zydus Healthcare and you quoted a number of 460 crore goodwill depreciation. In fact, in Zydus Healthcare till 2027, we don't expect any cash outgo on account of tax because of the other things which are available to us, which Nitin bhai just spoke about.
Sure, that's helpful. And one question I had on the India business. So dapagliflozin that we have launched, just trying to understand that can this product for Cadila be, let's say, something like 40-50 crore in, let's say, 2 years from now? Let's say fiscal 23 as a whole, because the market is growing very fast and very competitive price.
It will be a very good product. Obviously, we were the first to launch the single product, and we'll soon be launching the combination also. And we have got good traction, so we will see this become a large opportunity in the range of 40 to 50 crores, as you mentioned.
Okay, thanks, sir.
We also have at least 2 more introductions coming this year, which will be in that bracket of large, I would say. We have one monoclonal therapy coming, which will also be in the 40 to 50 crore range in 1 year's time. We are also have a few COVID products coming, which are very essential in terms of preventive, and we believe those could be very large also for the given year.
And these are the COVID drugs that you're mentioning, is it prescription drug?
Yeah. Well, it will be prescription, but some part of it will be OTC. We will also be coming out with the testing kit, which will be the first in India, which will be only saliva based at home use.
Okay. Sure. Okay. Thank you, sir.
Thank you. The next question is from the line of Surya Patra from Phillip Capital. Please go ahead.
Yeah, thanks for this opportunity, sir. So just on the vaccine side, possibly I missed your comment a bit. You said about a additional plant that you're setting up for vaccine, this Zycovid vaccine, with a 125 million capacity. But we already have a capacity of 100 odd million vials, right? So the cumulative capacity of around more than 200 million. Is that the capacity that we are targeting for this?
No, it's not the right interpretation. Our new facility will have the capacity to produce 120 million doses. Our current plants current smaller plants can only produce about 10 to 20 million doses. And we are also finding appropriate CMOs to additionally produce 50 to 70 million doses, and that is under the work.
Okay. So then the plant approval and validation, all that process will also take time. Is that the right understanding?
All that has been planned for, and we are ready for commercialization from April. I mean, from manufacturing, not commercialization. Sorry.
Okay. In fact, so far as the COVID portfolio for us is concerned, see whether the export revenue of this COVID portfolio is higher than the domestic revenue as of now?
Currently, largely it is domestic. We don't have major export revenue on COVID portfolio.
Okay. Not even for remdesivir?
Not significant.
Okay. Now, third question on the Revlimid, sir. Having seen settlement by your competitors, you are also a potential player to participate in that Revlimid opportunity by settling. So can you share your thought process on that opportunity?
So this is under litigation. So at this point, I won't be able to share anything more. As soon as I'm able to give any updates, we will apprise you of it.
Okay. And regards the US pipeline, we have been talking about the in-licensed product opportunities. In fact, last quarter it was some around 14 odd in-licenses that you were talking about. Now you have added a couple more. So can you give some additional color how that this pipeline would be contributing starting FY22?
So again, for the in-license portfolio, all of them are either fall into the complex. All of them fall under the complex category. Some of them is where we had missed the first to file opportunity, and we were able to in-license them, and we remained first to file with the partner and amongst limited players. We have a good amount of this portfolio is injectable. They form part of where either the process, the API is complex or the formulation is complex. So complex carbohydrate chemistry kind of APIs, peptides and other things. So that is the kind of portfolio that we have. We still have a pipeline of another 11, which we are in phase of licensing in further. In FY22, we believe we would see some important launches through this. And as those launches come upon, we'll specifically speak about those launches. But right now, I cannot give you a specific answer on a particular launches. But definitely, this portfolio is going to be very valuable. De-risk from a point of view that we don't put capital investment behind it. De-risk because we have been able to file on time or earlier than what we would have internally developed. So it's an additive for us. And we have one success so far, which is one of the products that we had launched on the injectable side, Fondaparinux, which was an in-licensed product. You will see similarly those types of products coming through in the next 2 to 3 years.
Okay. And so is it fair to believe that the growth momentum in the US portfolio or US business in FY20 would be kind of relatively much better than the recent trend what we have been seeing?
So FY20 you're saying?
22. FY22.
FY22 with the important launches that we have planned,
Yes.
we are looking at continuing to grow this I mean, we believe we can still do a high single digit growth, but going forward with the portfolios coming through, we can see a better trajectory of growth in the coming year.
Okay, fine.
Post FY.
Just last one question, sir. On the R&D side, with the multiple projects progressing simultaneously, there is a kind of a pickup in the R&D spend front that we are witnessing this quarter. Do you see there could be a kind of increasing trajectory that one should see on the R&D spend front, or what is your thought process there, and how would that be impacting the overall margin performance?
So R&D is a very important growth driver for the organization. So that has always remained very critical for us. And while we have to manage both the expectations of internal development as well as margins, we believe that we will be in FY22 also around 8% of our overall revenue as R&D, including all of the major developments that we have.
Okay. This quarter is a kind of aberration in terms of
every quarter on quarter will change, but overall our guidance is that we will be around 8%.
Okay. Yeah. Thank you, sir. Thanks a lot.
Thank you. Before we move to the next question, we'd like to remind the participants to limit their question to 2 per participant. If time permits, you may join the queue for any follow-up. The next question is from the line of Sameer Baisiwala from Morgan Stanley. Please go ahead.
Yeah, thank you so much and good evening, everyone. Sir, any update on Moraiya and your expectation, when can FDA come first half, second half this calendar?
Not really. We don't have any update on Moraiya. As I said, we did complete our correspondence to the FDA and we received that acknowledgement. I believe our next phase would be to receive any kind of response from the FDA with our responses that we have filed with them and whether they found them appropriate or whether there are any deficiencies further. But we await to those kind of communication. Until then, we won't be able to make any other kind of, we don't have any other view other than that. We do see for new products in other plants getting approvals through desktop audit, but for Moraiya, we don't have any update yet.
So if another 6 months, 12 months pass by, then does all the remediation work or CAPA work done, does it start losing relevance because it was implemented quite some time back at the end of this time?
So, the 2 large parts of the remediation work, one was related to injectables, and as we have stated before and we have communicated to the FDA also, we have stopped all injectables at Moraiya. So that, with the time point of view, doesn't change because, that one part of our complexity has been removed. The second was to do with cross-contamination, and we have taken the right CAPAs and we continue to, we appropriately completed all of that. We have been in the market for so long, we haven't had any major recalls, only because obviously we have not had any major, any contaminations or anything. So I think we are on track in terms of the remediation. I don't think time will change it, but it will not become ineffective because of time.
Okay, great. So in Saro, any color you can share, what is your expectation, of what the adoption can be in India in year 1, year 2? And second, just to that, it's approved here in India and you are working phase 3 in the US. Is it a theoretical possibility that, it gets approved in India but doesn't get approved in the US? I guess what I'm asking is that technological leap of faith or it's pretty much a done deal for the US?
So we have, in India we have very, we are very, I would say, ambitious in terms of what we want to achieve because this is the first treatment available and it's a single dose. So the pill burden doesn't exist and it has multiple benefits beyond obviously improving the liver profile. So as I said, we believe this can be easily a 250 crore plus molecule for us in India. And that is how we are building towards building for that. Internationally, because we see our data on PBC, which is a phase 2 readout, is almost an equivalent to an efficacy trial. we have a very large data on safety that we have created. In India, on NASH specifically, we have biopsy related data. So I believe that it's, in our view, while it's a process of drug discovery and anything can happen, but on PBC, we are extremely confident that with the data that we have seen both in India and Mexico and in US in phase 2, we are very confident that this can move with very little chances of failure to approval post our successful phase 3. On NASH, it's a difficult field and the onus is I mean, there's a lot of expectations on what is expected in terms of outcome. With the recent guidance of the FDA, I think it's very positive for the people who are working on this indication. So again, we have very strong data in India and in other countries. So again, we are very optimistic on that. But definitely, if you say chances on PBC are almost certain. On NASH, as we move forward, we can talk more about it. But our phase 2B was very good. So we believe that we are on track for this product to become approved for both indications. But obviously, there are always challenges and one must not take these for granted.
Yeah, thanks for this, Sharvil. I just have one more on the same Saro. Is the primary endpoint quite similar that the regulator wants here in India versus what they want in the US, or they're two completely different things?
So there are two areas, right? One is a NASH score and one is the fibrosis.
For NASH, yeah.
Yeah. So NASH and fibrosis, there are two options. The higher end of the spectrum is to get a reduction in fibrosis from F3 to F2. And the broad-based more indication is the NASH score, which is just reduction in NASH score. So on both those parameters, India and US have similar outcomes. It's just that in US, they do expect a pre and post biopsy. In India, we did a post biopsy. So obviously it has to be done. So it's very similar, I would say.
Okay, just one final from my side, if I may. And I think the previous speaker already asked you. On Revlimid, Sharvil, is it fair to think that you would be in the first wave of market formation?
I can talk about it once we come closer to the trial getting over, and we'll definitely give a proper update on that then.
Okay, cool. Thank you so much.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in queue, please limit a question to 2 per participant. The next question is from the line of Harith Ahmed from Spark Capital. Please go ahead.
Hi, thanks for taking my questions. So on Desidustat, you disclosed today that you finished patient enrollment in the anemia in CKD indication. So could you give some timelines around these trials? And I see that these are US registered trials. So the question is whether you'll be able to make a US NDA filing with this trial data, assuming the trial data is positive.
So on Desidustat, we have the indication that we are working for in India is not the indication we are working for in the US. The indication for India and China are similar, and I'm very happy to say that on the India front, we have completed enrollment, and we see, we're looking at the phase 2 data, if similarly we are able to show good data, this could be potentially one of the first molecules to get approved as an oral drug for anemia for CKD patients and non-CKD patients. The opportunity size, again, this is a 100+ crore opportunity for us in terms of commercial potential in India. Similarly, in China, which is probably the largest market for CKD and kidney dialysis patients, again, there we are tied up with CMS, and that is also moving on very well. So that is to do with these two markets, and these are not regulatory filings for the US. For US, we're working on an orphan-like indication for people where we started a trial on chemotherapy-induced anemia, and we're targeting those patient subsets. And we believe that could be a much better value driver for us in the US market.
Any reasons why we are not targeting the anemia and CKD indication in the US? Because the question is also in the context of these being...
Yeah, it doesn't make sense because by the time we get approval, there could be a product that is already generic. So then you don't have the value driver for it.
Okay, got it. And on Saroglitazar, you alluded to a 2023 launch in the PBC indication. So have we started the phase 3 in PBC? And if you could also help us with the competitive dynamics in the PBC market in the US. There is UCBA and quite a few other candidates that I'm seeing, including other PPR agonists in development. So how are we positioned versus some of these other drugs in terms of developmental timelines in PBC?
So I think we have the potential to be in the first wave of launches in the US, and that's what we are targeting for Saro for PBC. Getting a fast track designation will help us move the parallel submission faster.
Okay. And on the phase 3 timelines?
As I said, phase 3 we are already going to start in the next month or so.
Okay. Thanks a lot. That's all from my side.
Thank you.
Thank you. The next question is from the line of Vishal Manchanda from Nirmal Bang. Please go ahead. Vishal, you're not clearly audible. Vishal?
Hello. Is this better?
Yes.
Hello. Is this better?
Yes, please go ahead.
Yeah. So I have a question on saroglitazar. Just wanted to understand how saroglitazar is currently in the domestic markets and how fast is it growing on a YoY basis?
So saroglitazar in India in the current earlier indication of triglycerides is done extremely well. We have more than 1 million patients who have been on the treatment, and we are seeing strong double-digit growths year on year on this molecule. And with these new indications, obviously this will increase significantly. We are targeting it to gastro, endo, and other important practitioners, and we are seeing very strong traction. And with the amount of publications and data that has now been published on Saro, we are seeing. We will see this molecule as a potentially large blockbuster molecule for the company in the coming year.
Would this figure among your top 20 brands now or not?
Not yet. Not yet. I don't think it is in the top 20 yet. I don't have the data, but I can come back to you on that.
Oh, okay, sir. And just one more on saroglitazar in PBC. So in the phase 2 trials, there were incidences of drug-induced liver injury at the 4 mg dose. And we have seen similar cases with other PPAR agonists that are under development, but competitors have been able to address it using a lower dose. So have we kind of seen similar situation with saroglitazar? So
no, we don't have that issue. We are not a typical PPAR, and we don't have that. We don't have that concern in our phase 2 data.
Okay. And just on the tax rate, what would be the annual effective tax rate?
So it should be in the range of 20-21%.
And this should remain so in FY22 as well?
Yes. Yes, we believe so.
Okay. Thank you. That's all from me.
Thank you. The next question is from the line of Abhishek Sharma from Jefferies. Please go ahead.
Hi, thanks for taking my questions. Sir, just a couple of questions on saroglitazar again in PBC indication. If you can just share with us the top line headline results from the proof of concept study. What were the endpoints? Did you look at reversal of liver damage or was it restricted to symptomatic relief? In phase 3, what number of subjects and duration are you looking at? Thank you.
So Abhishek, it will be very difficult for me to off the hand tell you those answers, but I'm happy to set up a separate time to give you those specific answers.
All right. But just on phase 3, have you had a discussion with FDA in terms of number of subjects that you're planning to recruit?
Yeah, we have had the correspondence with the FDA and we are aware of the number of subjects we need to do. But offhand, I don't have that exact number, so I won't be able to give it to you.
Sure, sir. I'll come back. All right. Thanks.
Thank you. The next question is from the line of Kunal Mehta from Vallum Capital. Please go ahead.
Thank you very much for the opportunity. Just wanted to coming to PBC for saroglitazar. So could you please help us understand how long do you expect the trials, phase 3 trials, to go on for this molecule? I mean, if you start, you mentioned that we're planning to start next month. So and the closest launch date you mentioned could be in calendar year 23. So how long do you expect the trials? And after that, what are the milestones one would expect to monitor?
So for saroglitazar, we believe commercialization is potential in calendar year 23. So that's what we are targeting for PBC. And for NASH, it will be, we hope to file by end of 24 or in some part of 25.
Absolutely, sir. And this trial for PBC would last for a year or so, more than that?
Yeah.
Okay. And just the second question from my end, I wanted to understand in terms of the launches planned for the US for the next year, financial year 22. Could you give us an understanding of how many launches are you planning for the next year? And
So in the next year in the US, we are planning for 40 plus new launches. And out of that, we have at least 8 or 10 molecules which are high value.
Understood. And just got it. And just the last question from my end. I mean, this is something I wanted to understand a bit in detail. Just sir, this regarding the whole mesalamine franchise. Just wanted to understand, we've seen our share drop and then recover back very strongly. And I think even Lialda and both Lialda and Asacol HD, and I'm sure you have a few other products also on the mesalamine side in the pipeline. Just wanted to understand the complexity here in terms of, this whole product basket, which prevents other players in the market to gain meaningful share in this product. So could you just help us understand what is it that which prevents, which makes it difficult for other players to gain their better higher share in this molecule? So what is it working in our favor for this molecule? The whole mesalamine basket.
So I think the whole mesalamine basket, the first and most critical thing is API, and API forms a very critical part of the formulation. And the second aspect of it is that to produce at such large scales, it's a very sensitive product in terms of having the right processing parameters to make sure that you have the right dissolution results. So it is very tricky there, and that's why the scale up has been very difficult for this. We have been obviously working for now 12 years, so obviously we have had a lot of learnings during the way, and this product did take us a very, very long time to get approval in this whole franchise. So we have learned it over a period of time. So it does require a lot of capability, and it takes time more than also capability. And as I said, API forms a very integral part of the whole value chain.
Got it, sir. Just a final question from my end. Just regarding two subsidiaries where we are planning to launch products, but I think the product launches have been delayed because of Moraiya clearance, which was Zydus Noveltech and Zydus Technologies, I think, which we are planning to merge. So are the cost of these two entities still presently being charged the profit and loss, and where we are not right now able to absorb these, or is there? Could you give us a quantum?
That Vishal or Nitin bhai, if you can talk.
Sorry, Kunal, can you repeat your question? Last question.
Yeah, so we had two entities which were catering to the transdermal side, where I think because of Moraiya resolution pending, the transdermal launches have got stuck in that. So could you give us a quantum of the cost of these two entities? I mean, the operational costs which are hitting the P&L, but right now there is no revenue corresponding to these on a quarterly basis.
Yeah, I'll get back to you on the specific numbers. I'm not carrying those numbers right now.
Sure. Okay. All the best. Thank you. That's it from me.
Thank you. The next question is from the line of Kunal from Emkay Global. Please go ahead.
Thanks for the follow-up. So the first is how much R&D would we be spending right now on the specialty or let's say innovation effort, including vaccines, Saroglitazar, Deciluce? So let's say
so we don't give individual breakups on overall different franchises, but as I said, overall our cost of R&D is 8%, but segment-wise we don't give updates.
Okay, because it is expected to become an important segment for us, and hence I think some details would be useful there in terms of overall what are we spending on the innovation effort. And
so that said, right, for 40 to 50% is on generics portfolio, and the remaining over a period of, over a period of 40, 50, equal proportion on the generics as well as generics and 5FB2 versus the NCE and biologics and vaccines driven portfolio.
Okay, that is helpful. And secondly, with this vaccine plant that we are planning to set up, that does not change our capex outflow, right, significantly?
The vaccine plant is under construction and will be commissioned in April, so it is as part of our capex plan currently.
Okay, and what is our capex for this year and for next year? What would be the capex?
Nitin bhai, you can give that answer, please.
It should be in the range of 700 to 800 crore rupees. Both years.
Okay, both years. Okay. Thank you.
Thank you. The next question is from the line of Ranveer Singh from Sunidhi Securities. Please go ahead.
Yeah, thanks for taking my question. Sir, on vaccine side, do we working on pneumococcal vaccine also?
Yes, we are.
Okay, because I was asking in this context that in this budget, government mentioned pneumococcal vaccine to roll out all over India. So, do we see any opportunity there, or it is, it will take some time to actually launch this work?
Some time. We are in the development phase. We are working on the next generation of the pneumococcal vaccine, which covers the largest number of strains. And that's our development plan. And one other important vaccine which has become very relevant is our flu vaccine, because we are the only Indian company to have the quadrivalent flu vaccine. So that is an important vaccine for the future as well.
Okay. So overall vaccine portfolio, we have been talking about this to be a sizable business going forward. So what's your current contribution and how it should pan out in the next 2-3 years, if you could give, excluding this J-COVID?
So currently it is not very large. It's about 70 crore kind of franchise. But without the COVID, we are hoping that by 24-25 we hit $125 million revenue for this.
Excluding COVID vaccine.
Yeah. COVID is very large.
Okay. And on Saroglitazar side, in US initially we started with the dyslipidemia also, and later we suspended it. So do we have any plan to work on this indication also?
So in US we have always worked on NASH, and then we added PBC, not on dyslipidemia. It was an indication for India.
Yeah, so that you wanted to understand. So we started, then we suspended it. So because that was not successful, or we want to put our source in PBC because their prospect was better. So that was the reason.
So two things. One is obviously the prospect on NASH is far better. The second is some of these require, if you see the outcome, large outcome trials, which would be very, very long and painful. So we have to prioritize where we feel the maximum value is.
Okay. And the last one, on Zycovid, you see in first phase, the way vaccination is happening in India, I think by the time we will be ready with the vaccine, a sizable population would already have been given the vaccine. So do you see that the opportunity size, which earlier we anticipated, has considerably reduced?
Not yet. I mean, India requires, I don't know, but if you assume even 30-40% of the population getting vaccinated, you need at least, 150 crore plus doses. So obviously it's not a small number. This will definitely become a vaccine that will be required on some frequency basis. You can already see where a lot of places they're talking about annual vaccination requirements. So it could become part of the annual vaccination. So I don't think this opportunity is limited, and there's no way the demand can be met through in a period of a few months. Any global vaccination program, even the most successful ones, have taken 10 years. With all the might and resources that all of us will put in, we don't believe this can happen in a period less than 3 to 5 years. So it would be very wrong to assume that we'll be able to vaccinate large part of the population in few months.
Thank you. The next question is from the line of Nimish Mehta from Research Delta Advisors. Please go ahead.
Yeah, thanks for the opportunity. Just one question on US. When are we likely to launch this product, doxycycline hydrochloride, Silenol, branded as Silenol, and diltiazem hydrochloride? I understand in both these products we have settlement, and in Silenol we also have a tentative approval. So, and also want to know whether these are important products or not.
They are important products. They will be launched in new launches in Q1 and Q2.
Okay, interesting. And next, on the India formulation, actually I missed some of the initial comments. What is the ex-COVID formulation growth in India? And what do you think is the outlook on, remdesivir outside of India, especially in exports?
So obviously there's a major concern outside of India versus India when it comes to COVID right now for the current time. However, the markets are limited in terms of what is available for Indian companies in terms of part of the licensing agreements. So we still see some good opportunity for some of the markets, and we believe we will get good share when it comes to those markets. They don't form part of the largest market shaping opportunities, but whatever there is, we would see at least a good amount of traction. As and when we get good opportunities, we will obviously keep people updated. On the India front, remdesivir, obviously the cases coming down. Remdesivir sales are not as large as they used to be, and they have tapered off every month. For us on our domestic business, as I said, in terms of our execution, other than anti-infectives where we did well from the market point of view, but internally obviously we didn't have good growth. But on the cardio-diabetic portfolio, on the respiratory portfolio, pain and inflammation, we did very well. We're seeing good recovery on gastro, and we hope we can come up. Similarly on also on gynae and derm. So we have those two therapies still need to come up, but by and large the specialty portfolio has done well.
Okay, but what could be the number ex-COVID formulation growth YOY this quarter?
We are not giving ex-COVID numbers.
Okay, thank you very much.
Thank you.
Thank you. The next question is a follow-up question from the line of Anubhav Agarwal from Credit Suisse. Please go ahead.
Yeah, hi. One question is on the vaccine front. Sharvil, when you talk about this business almost becoming 1,000 crores, just wanted to understand, I assume a large part of delta will come from the export business. So when we look at the WHO opportunity, where do we stand on this? What needs to get cleared for that large opportunity to kick in?
Can you just repeat that question? I missed part of it. Sorry.
Sure. My question is on the vaccines front. When you're almost guiding that without COVID, this can become a 1,000 crore business at some point in time in the medium term, I'm assuming a good part of this will come from the WHO contract. So I'm just trying to get an update there. What is the trigger for that large portion of revenues to start flowing in?
So that is FY20, 23 onwards, and 23-24 will be those years when we can see pre-qualification through and obviously the tenders through. So that will be in calendar year 23 and calendar year 24, largely calendar year 24 when you will see that major triggers for WHO global PQ. And obviously getting the, we are targeting a 10-12% share, so we're not targeting a very large share. But if we get that 10 to 12% share on the 3 molecules that we are, 2 of them we are targeting, and some other niche vaccines like varicella and others in some of the private markets, we can see us achieving those numbers.
And what will be the split of this 1,000 crores roughly? How much will be domestic versus export?
I do have that projections, but I don't have top of the mind. Obviously, I am not able to recollect, but. So if you can, I can share that with you separately.
I'm say 30% domestic or 50% domestic. So which will be more? Export will be more or the domestic will be more?
Export will be more because will be definitely more, followed by Indian public, and private will be similar.
Okay, and just last question from my side on the cost front. Over last 6 months, besides the saving on the promotion cost, more digital initiative, any other cost initiative which have been very significant in the organization which would have helped the margins for the company?
So we continue to work on cost, both operational cost and obviously input cost. And there we have consistently every year we have demonstrated good savings. So I still believe that we will continue to add almost 1% margin improvement because of these initiatives. We would now have new investments in front end on the digital front. So that is something that we are poised to do, because we believe that maybe slowly but steadily one needs to build a strong digital outreach program for the medicine side, and that is what we are endeavoring towards building.
This is towards the doctor side?
Yeah, doctors and also patients then. We are looking at both.
Sorry, can you explain what do you mean by digital outreach to patients?
So we strongly believe as a pharmaceutical company, we have to look at health outcomes and reduce disease progression as well as show positive outcomes. So on certain therapies, we are building our capabilities to be able to work with the medical practitioner and most importantly patient to make sure that we can reduce disease progression or show better outcomes, and that is what we are working towards. And so those will be specific to therapies like NASH, specific to COPD, then obviously some specific in cardiodiabetes side, renal side. These are the therapies that we are targeting to give patient support in every form to make sure that the outcomes are better.
Sure, that's useful, sir. Thank you.
Thank you. The next question is a follow-up question from the line of Surya Patra from Phillip Capital. Please go ahead.
Just a bookkeeping question. Is there any reduction in the debt even during this quarter beyond the 1,500 crore what you have done in the previous quarter?
Yeah, so Surya, I'll answer that question. As on 31st of December, our net debt stood at 3,800 crore rupees. Which, if you compare with 30th September, which was at 4,030 crore rupees, so almost a reduction of almost 200 crore rupees plus. And if you look at it from March end number, there is a reduction of almost 2,900 crore plus.
So that means whatever guidance that or indication that we have been giving about 2,000 crore, that has been done.
Yes, largely done. Or maybe more than that actually.
Yeah. Okay. Thanks, Mr. Thanks.
Thank you. Ladies and gentlemen, that was the last question for today. I now hand the conference over to Mr. Ganesh Nayak for closing comments. Thank you, and over to you, sir.
Thank you very much, and look forward to interacting with you again in the month of May for our last quarter FY21 results. Thank you and good night.
Thank you very much. Ladies and gentlemen, on behalf of Cadila Healthcare Limited, that concludes today's call. Thank you all for joining us, and you may now disconnect your lines.